Good morning, I'm Nathan Hager.
And I'm Karen Moscow. Here are the stories we're following today.
We begin with politics this morning because former President Donald Trump is now facing new obstruction charges in the criminal case over how he handled classified documents. Amy Morris begins our team coverage from our Bloomberg 99.1 newsroom in Washington.
These are new charges in the classified documents case. Allegations that Trump and two employees tried to delete surveillance video footage at his Mar-a-Lago estate last year. In this latest indictment, prosecutors accused Trump of directing workers to erase footage of a storage room where the documents were kept, days after his lawyers received a subpoena for the footage. It also includes one additional count accusing Trump of willful retention of national defense information. He's already pleaded not guilty and faces a May 20th trial date. In Washington, I'm Amy Morris, Bloomberg Daybreak.
All right, Amy, thank you. Well, these new charges put even more legal pressure on the former president. We continue our team coverage of this story with Bloomberg Justice Department reporter Chris Strom.
This most likely will extend the timeline for the Trump case. It's very possible that what Jack Smith is trying to do here is get De Oliveira to flip on Trump. And by bringing these charges, he's looking to put pressure on De Oliveira and have him break off from Trump. They're all lumped together now in the indictment, Trump, Walt Nauta, and De Oliveira. And at this point, the special counsel is going forward with the prosecution.
And Bloomberg's Chris Strom says there's still more legal trouble on the horizon for former President Trump. He awaits a potential third indictment over efforts to overturn the 2020 election. Word on that could come any day now.
Now, there are new developments in geopolitics this morning, Karen. New tensions between the U.S. and China, and this time they come by way of Hong Kong. The Washington Post is reporting that the White House is barring Hong Kong's leader, John Lee, from a major economic summit this fall. Bloomberg Daybreak Asia anchor Brian Curtis has more from Hong Kong.
John Lee is sanctioned by the U.S. for his role in Hong Kong's crackdown on civil liberties. The Post cited three unidentified U.S. officials as saying Lee would be barred. The Hong Kong government issued a statement saying the APEC meeting does not belong to any one country, and the U.S. should fulfill its responsibilities as a host. Now, blacklisting Lee will surely raise tensions. The U.S. recently condemned Hong Kong after it put bounties on 8 democracy activists wanted under a Chinese national security law. In Hong Kong, Brian Curtis, Bloomberg Daybreak.
All right, Brian, thanks. Well, turning to the markets now, we've seen bond and currency markets jolted overnight by the Bank of Japan. Global bonds fell after the BOJ announced more flexibility in its yield curve control policy, and that spurred speculation of more changes to come. Bloomberg macro strategist Mark Cudmore says letting long-term interest rates rise above their cap was a surprisingly hawkish move.
Effectively, what they've raised the hard cap to 1%. And even then, they haven't said it's going to be unlimited purchases of JGBs at a 1% yield. It's just going to be daily purchases. So that's basically moved the hard cap up from 0.5% to 1%. That's a 0.5% move there in that cap.
And Bloomberg's Mark Cudmore says loosening yield curve control marks the first surprise move from the Bank of Japan's new governor. It could make the yen a more volatile trade, and checking the yen right now, it's at 139.52 against the dollar.
And back here in the U.S., Karen, earnings season continues to rumble on with key guidance from Intel. The chipmaker issued a bullish revenue forecast indicating demand for computer components is improving. The outlook follows a slow start to the year and makes good on a promise from Intel management that the second half of 2023 will show improvement. And checking shares of Intel right now, they are higher by nearly 7%.
And Nathan, we also got earnings from MasterCard. The company saying card volume rose more than expected to $1.8 trillion. That beat estimates. MasterCard says overseas travel and other entertainment is primarily driving the increase. Earlier this week, Visa also noted that spending on its cards jumped and also cited higher volumes tied to travel.
Okay, so while travel spending appears healthy, Karen, commercial real estate, that's a different story. Now we're learning U.S. office data are on track to set records, but for the wrong reason. Bloomberg's John Tucker explains.
The amount of office space in the U.S. is declining for what's likely the first time in history. The real estate services company, Jones Lang LaSalle, says less than 5 million square feet of new offices broke ground in the U.S. so far this year, while 14.7 million square feet has been removed. This would mark what is believed to be the first net decline ever. The closest we came to negative inventory historically would have been during the height of the Great Depression. Among the reasons for the decline, employees have been slow to return in certain cities, and office owners are grappling with a pullback in demand for many tenants. In New York, I'm John Tucker, Bloomberg Daybreak.
All right, John, thanks. We also have an important note from the airline industry. American Airlines and negotiators for its pilots union reached a preliminary agreement on a proposed contract. It'll include higher pay and benefits more closely aligned with a labor agreement at United Airlines.
And if you've been feeling extra hot this July, it's not just in your head. This month is set to become the world's hottest on record. The first 21 days of this month were the hottest 3-week period, with July 6 seeing its highest ever global average temperature. And now it's time to take a look at some of the other stories making news in New York and around the world with Bloomberg's Michael Barr. Happy Friday, Michael.
Happy Friday to you, Nathan. And more on the heat that you just mentioned. Excessive heat warnings remain in place for New York City and a lot of the tri-state area today. New York Mayor Eric Adams.
And we need to be clear when we talk about hot weather. Heat kills. More New Yorkers every year than any other kind of extreme weather event. And access to cooling is a matter of life and death.
Mayor Adams says the city has opened up 500 cooling centers. A 15-year-old swimmer remains missing after going in the water off of Coney Island in Brooklyn. Lifeguards and witnesses saw 2 boys in distress in the water in a no-swimming area of the beach. The 14-year-old was rescued, but the search was called off last night for the 15-year-old. President Biden had strong words for one U.S. senator. Biden accused the Republican Party of undermining the U.S. military by allowing Alabama Senator Tommy Tuberville to block hundreds of military appointments over the Pentagon's abortion policy.
A growing cascade of damage and disruption, all because one senator from Alabama and 48 Republicans who refused to stand up to him to lift a blockade over the Pentagon policy offering servicemen and women, their families, access to reproductive health care rights they deserve if they're stationed in states to deny it.
Tuberville is protesting the Defense Department policy put in place that provides paid leave and reimburses costs for troops who travel to another state to get an abortion. The Biden administration is set to tighten fuel efficiency standards of automakers. Bloomberg's Ed Baxter reports.
The proposed rule is expected to be applicable to years 2027 and beyond. The move comes as gasoline prices are rising again. Details have not been announced, but previous proposals have it at averaging fuel economy by brand at 49 miles per gallon. It also will push for half of all vehicles sold in the U.S. to be electric or emissions-free by the end of the decade. It could be issued as early as today. In San Francisco, I'm Ed Baxter, Bloomberg Daybreak.
A founding member of the Eagles has died. Randy Meisner added high harmonies to some of the Eagles' favorites.
Take it to the limit one more time.
Along with Take It to the Limit, Meisner also gave us Take It Easy and The Best of My Love. The band says Meisner died of complications from COPD. Randy Meisner was 77. Global news 24 hours a day, powered by more than 2,700 journalists and analysts over 120 countries. I'm Michael Barr. This is Bloomberg, Nathan.
Thanks, Michael. Time now for the Bloomberg Sports Update. Here's John Stashower.
All right, Nathan, we have an answer to the question surrounding the Mets the past several weeks. Will they be buyers or sellers at the trade deadline? They are sellers. They just traded their best reliever, David Robertson, had the lowest ERA of any pitcher on the staff, sent to Miami for 2 rookie minor leaguers. The Marlins are in it for a wild card playoff spot, and the Mets really are not, although they did win last night at Citi Field. They scored twice in the 8th inning to top Washington 2-1. The Yankees play tonight in Baltimore. It is said to be likely that Aaron Judge will be in the lineup, out since early June with the injured toe. The Yanks 2.5 games out of a playoff spot. The Angels are just behind the Yankees. Angels just had a doubleheader sweep in Detroit, where the remarkable dual talents of Shohei Ohtani were on full display. A complete game, 1-hit shutout on the mound in the opener, and then 2 home runs at the plate in the nightcap. At Giants training camp, Saquon Barkley's first comments since his decision to accept the 1-year franchise tag and not hold out.
Some people may agree or disagree with this, and sit out or sit in. And I feel like for this year specifically, the best thing that I can do for myself would be coming back going out there, play the game that I love, playing for my teammates, doing something I want to do since I was a little kid.
Barkley called it an epiphany. Giants did sweeten the deal to entice him. From college football, Colorado, now coached by Deion Sanders, left the Big 12, joined the Pac-12, now going back to the Big 12. LeBron James' son, Bronny, out of the hospital in L.A. after suffering that cardiac arrest. John Stashower, Bloomberg Sports.
From coast to coast, from New York to San Francisco, Boston to Washington, D.C., nationwide on SiriusXM, the Bloomberg Business app, and Bloomberg.com. This is Bloomberg Daybreak.
Good morning. I'm Nathan Hager. Every aspect of finance is affected by the artificial intelligence boom, and Wall Street's main regulator is taking notice. The Securities and Exchange Commission is proposing restrictions for brokerages and money managers that use AI to interact with clients. Chair Gary Gensler says it's about firms putting client interests ahead of their own. Gensler talked about that and his moves to further regulate the crypto industry in an interview with Bloomberg's Kaylee Lines and Danny Berger. Let's listen in to part of that conversation right now.
I'd like to begin with your newest rules that you just unveiled yesterday, putting restrictions on brokerages and money managers and their use of AI to interact with clients. What is your primary concern with the adoption of this technology that you're trying to address?
First, Kaylee, it's good to be with you. But talking about this, I think that predictive data analytics, including artificial intelligence, is the transformative technology of our times, and every bit as transformative as the internet or mass production of the automobile 100 years ago. Now, what are we trying to address? When an investment advisor or a broker works with you as an investor, they're not supposed to put their interest, the advisor's interest, ahead of yours, Kaylee, as an investor. Mm-hmm. And so what we're trying to do is make sure that the technology aligns with that standard, that the technology that can predict about each and every one of us so much about how we might react to a little behavioral prompt or a little nudge, how we might react, that they're putting our interest as an investor in the right place and not putting themselves ahead of it.
And of course, the AI move wasn't the only one you made yesterday. You also just approved a plan to require companies to disclose cyber breaches within a 4-business-day timeline. Why is that the appropriate time frame?
Well, if I could just give a little bit more, it's about material incidents. So if a company lost a factory and that factory is wiped out and that factory is material to its operations, let's say because it's lost to a hurricane, investors need to know when they're buying and selling the stock. In a similar way, if you had a cyber incident that management determines is material, hundreds of millions of files lost or something, or compromised, investors benefit from that disclosure.
But giving businesses just 4 days to disclose that. That's
what we have in our rules today. Currently, 4 business days, if you have, like if that factory, was wiped out by a hurricane, to put out the material information. And so that's consistent with rules on the books. And by the way, many companies have been making such disclosures. Some haven't. It's been fragmented. And we thought it was important to bring some consistency to it around these material events.
Mr. Chair, Danny Berger here in London. Really wonderful to speak with you today. Now, on some of your proposals when it comes to equity market structural reforms, you joined Bloomberg TV back in March. You said of market participants, give us your best advice. Tell us what you think. What did you get? What was the best advice you got?
Well, we got, in terms of equity market structure, thousands of comments. So I would say that what we're about at the SEC is trying to drive greater efficiency and competition in those markets. So when you send an order into a broker, that you feel that you're getting best execution on that order, and also that the markets themselves are competitive. So one of our rules was about sort of leveling the playing field between the lit markets, the so-called New York Stock Exchange and NASDAQ and so forth, and the wholesalers or dark market, which at times the dark part of the markets are between a third and a half of the market. So it's trying to bring some level the playing field and ensure that investors are getting best execution in these markets.
What about in terms of the feedback you got? Are you taking any of that on board? Would you change anything considering what you've heard so far?
Well, we do that as a regular basis. When we make a proposal, we put it out to public comment and get feedback. And we put out 4 separate proposals for different aspects in the markets. And I think we've gotten 4,000 to 6,000 comments on each of them. So, and we naturally consider it, and the staff makes recommendations about adjustments.
Okay, I'd like to discuss another proposed rulemaking that has received a certain degree of feedback, your climate risk disclosures, specifically as it relates to Scope 3 emissions. What conversations are you having around Scope 3 in particular?
Well, we've heard a lot from the public on this, but to set the stage, companies today are making disclosures around climate risk. In fact, well over half of the top 1,000 or so companies currently make climate risk disclosures, including greenhouse gas emission disclosure. So we're trying to bring consistency to that. And yes, for investors, that they can compare comparability for that. You asked about one part of greenhouse gas emissions, so-called Scope 3, which is about the supply chain. And
right, where a lot of the concern lies.
And so we've heard from a lot of commenters about that, both from issuers and investors. We understood when we made a proposal that this was not as well developed, so-called disclosures around supply chain emissions. And so we're taking that into consideration. And as I just chatted with your colleague, the staff considers what to recommend upon adoption and whether to make adjustments.
So we could see a change there, potentially.
Well, just as in the equity markets that I talked about, we do take these comments seriously, Kaylee. It's a really rigorous exercise. In climate, we got 16,000 comments.
Wow.
So it's a lot to sort of sort through. But the Scope 3 issue is one that we've heard significant comments. Interestingly, we've heard from, I think, 48 or 49 of the state farm bureaus, literally about, well, what does this affect? And we only oversee the public companies, these 6,000 or 7,000 public companies. That's it. We are a disclosure-based agency. I often say we're merit neutral. We're not this disclosure is about something already happening between investors and issuers. And it's an important thing to bring consistency. It's not about those, those farmers and ranchers who thoughtfully wrote us. So we've heard.
Okay. I'd like to move to a different topic, which has gotten a lot of attention lately, crypto. Specifically, a ruling that was made in the Ripple case that XRP is only a security when sold to institutional investors, not so with retail investors. I know you've previously said you were disappointed by that ruling. The SEC has also said that it intends to seek further review. So does that mean you are going to appeal it? Can you elaborate on your thoughts around that ruling?
Kaylee, great question, but the commission, I'm one of 5 commissioners. The commission has not acted on that, and if the staff makes a recommendation, we'll have a discussion of it, and we'll take it up then, but I don't really have anything more for you for that.
In the meantime, as we wait for this, what does it mean for your efforts around crypto, for your efforts to try to protect the consumer in these areas? Does it complicate it?
Look, this field of crypto investing, a lot of investors should be aware it's not only a highly speculative asset class, it's also one that they currently should not assume that they're getting the protections of the securities laws, even though the securities laws apply to many of those tokens without prejudging any one. But you as investors are not getting the full, fair, and truthful disclosure. And the platforms, the intermediaries, are doing things that we would never in a day allow or think the New York Stock Exchange or NASDAQ would do. The platforms often are commingling and trading against you and have market makers that are on the other side of your trades. And we don't allow that in the rest of our securities markets. And the securities laws are there to protect you. And that's right now, this is a field rife with fraud, rife with hucksters. And there are good faith actors as well, but there are far too many that aren't.
And of course, you've brought cases against crypto exchanges on this point. But do you need to change tactic? Does it change anything for those cases? Again, this XRP ruling.
Again, I'm not going to go into any one ruling, but I think that the securities laws are clear. And if the public is investing in your project because they're anticipating profits based upon the efforts of that project or those entrepreneurs, Congress painted with a broad brush. And I would ask you this, is like when you look at a token, you can find a website, you can find a CEO, you can find a Twitter or X feed, whatever it's called these days. And there are entrepreneurs behind many of these projects without, again, prejudging any one of them.
Elsewhere in the crypto space, I'd like to discuss a spot ETF because we have seen a wave of filings recently from BlackRock and others trying to finally achieve this. One has never been approved in the U.S., just a futures ETF. It seems like everyone thinks there has been a tone shift, that something is different this time around. What do you make of that wave of recent filings? Has anything actually changed for the SEC?
Well, Kayleigh, it probably won't surprise you. Those filings do ultimately come up to a 5-member commission, so I can't prejudge any filing. But back to your colleague, as I said, this is a field that there's a lot of non-compliance in this field, and that the platforms themselves, where trading is occurring of various crypto tokens, though some of it comes under the securities laws, currently they're not necessarily compliant with those time-tested protections against fraud and manipulation.
Okay, on the subject of securities laws, which obviously is your purview at the SEC, just yesterday, House Financial Services Committee passed through committee legislation on crypto market structure that would actually give more authority in regulating this space to the CFTC. Still has a long way to go if it were to become law, but what is your thought on that legislation?
I sort of share my thoughts directly with members on the Hill.
And what have you told them?
I understand your question, Kayleigh, but I think that those members on the Hill would appreciate if I continue to share my thoughts directly with them.
Not too dissimilar, Mr. Chair. I wonder if there's some degree that you would want a wider scope when it comes handing down fines to bad actors. Do you think it would be helpful to have higher fines, again, in order to discourage certain behaviors?
I would say this. We have good tools at the SEC around not just penalties, but also what's called disgorgement to give back ill-gotten gains and so forth. But if you're asking whether we could use more authorities, I would say we need more cops on the beat. We need more resources. Our agency is just the size we were in 2016. We actually shrank. We've kind of come back, and yet the markets have grown so significantly in those 7 years.
And finally, as you say, you need more resources. I wonder how you feel about the ability of you to get those things from this Congress in particular, when you have certain members of Congress who have said things like introducing legislation to remove you as chair, referring to tyrannical chairmen, including the current one. Does it make it more difficult to do your job when there is that kind of political rhetoric out there in your efforts to protect investors?
We work closely with Congress and individual members, and I look forward to those public debates. I think that we're really an important agency. The capital markets really wouldn't work without cops on the beat and rules of the road. Just, think if you're watching soccer matches. If there were no refs on the field, what would that soccer match look like? It would look first more like rugby, and then after a while it would really look worse, and fans wouldn't come to the field anymore. Or, well,
I can
most
see that
wouldn't.
vision.
So I really do think that it's important to have this agency, and we're part of these well-regulated markets.
This is Bloomberg Daybreak Today, your morning brief on the stories making news from Wall Street to Washington and beyond.
Look for us on your podcast feed at 6 a.m. Eastern each morning on Apple, Spotify, and anywhere else you get your podcasts.
You can also listen live each morning starting at 5 a.m. Wall Street time on Bloomberg 1130 in New York, Bloomberg 99.1 in Washington, Bloomberg 106.1 in Boston, and Bloomberg 960 in San Francisco.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130.
Plus, listen coast to coast on the Bloomberg Business app, Sirius XM Channel 119, the iHeartRadio app, and on Bloomberg.com. I'm Nathan Hager.
And I'm Karen Moscow. Join us again tomorrow morning for all the news you need to start your day right here on Bloomberg Daybreak.